Creamer Media's Mining Weekly is speaking to Trevor Raymond, the head of research at the World Platinum Investment Council. Trevor, can you please tell us about the recent strong investment demand in the US, particularly for bar and coin?
Yes, what we've noticed is that since we published in May and obviously we publish again in September, we can still get some market indicators. And on investment demand, we can certainly see the growth in exchange-traded funds, how those ETFs have been growing. We also have a lot of partners around the world, and particularly in the US. And we talk to our partners, and they've been seeing extremely strong demand for bar and coin. Another indicator we have is that the exports are typically from Switzerland of those physical products, and we've seen a significant increase in exports between Switzerland and the US year to date. In fact, they're up by over 250% to about 216,000 ounces. So, Martin, it appears that particularly the retail investor in the US still has a strong appetite for hard assets, anything other than US equities. They certainly are owning a lot of gold and silver, but most definitely the demand for platinum is still significantly up on previous years.
Can you give us the present state of the hydrogen economy uptake in Europe?
Yes, I think the hydrogen economy is it's more global than just Europe. I think Europe has published its hydrogen strategy, and there they are committing to produce about 40 gigawatts of green hydrogen by 2030. So Europe has a lot of plans. I think the Biden administration is committed to the Paris Climate Accord in his first week back first week in office. So certainly the amount of fiscal stimulus that's going into the hydrogen economy is quite remarkable. So what we see that doing is reducing the cost of producing hydrogen and making hydrogen an attractive alternate to fossil fuels. In terms of developments, yes, a lot happening in Europe, particularly Switzerland. We have heavy-duty trucks delivering goods in Switzerland, and they've done over 1 million kilometers already with that project. It's 140 vehicles initially, growing to 1,400 vehicles. So that's going very well. But Martin, the main news flow on the hydrogen economy development is coming out of China. There's significant news flow of continuously more and more heavy-duty vehicles and medium-sized vehicles in municipal applications being developed in China and being built. So very good news for that rollout. And then obviously the other side of the hydrogen economy is the generation of green hydrogen. And there, as you know, the platinum electrolyte membrane fuel cell and then the PEM electrolyzer that converts water into hydrogen is the preferred technology. It's more efficient. It also has some advantages with variable power generation that comes from wind and from solar. So significantly more interest in the platinum-based production of green hydrogen. So that combined with platinum's use in PEM fuel cells certainly provides short, medium and long-term demand growth.
And how is the substitution of platinum for palladium going in petrol vehicles?
So again, that's been a real struggle for us. We've been quite convinced that substitution has been happening since 2018. Already in 2020, Johnson Matthey confirmed they were putting on units that must have been developed in a year or two prior to that. But the news flow has been very limited from the manufacturers of catalysts and also from the automakers. What we have seen more recently is BASF has been more vocal. Some of the others have mentioned it, but trying to sort of make it less profound. But Sibanye-Stillwater, who partnered with BASF, has been a lot more detailed in their statements. And initially, they were talking around 150,000 ounces this year, growing to 1.5 million ounces in 2025. They've increased that. They're saying they certainly believe there's about 200,000 ounces of demand for platinum substituting palladium in gasoline engines this year. And they've increased their target to between 1.5 and 1.7 million ounces, and that's only in 4 years' time. So I think that demand growth is quite profound, particularly in the face of constrained supply.
And finally, Trevor, what are the main drivers of platinum demand going forward?
So I think, Martin, I suppose the demand drivers, the substitution is certainly the most significant and material demand growth that we've seen in the 6 years that we've been doing what we do, and that is to try and give investors more information to make informed investment decisions. So that demand growth in terms of substitution is quite huge. 1.5 or 1.7 million ounces of extra demand on an 8 million ounce market. That really is material. I think the other thing is strong industrial demand. As the fiscal stimulus packages around the world come out, people are trying to basically spend money on building infrastructure to try and dig themselves out of the COVID hole. And all of that infrastructure certainly does rely on industrial metals, and platinum is certainly part of that. It's a strong glass production, chemical production, that all seems to be increasing demand, and we'll have a better read on that in September. And then the other thing is, I think just in general, the PGMs are all in demand. Substitution is one aspect. The issue around whether it will be possible to switch to 100% electric vehicles within 10 years, that seems to be increasingly unlikely. We're waiting for a pronouncement on Euro 7. There certainly has been a recent ruling on collusion. So I think there is a likelihood that hybrid vehicles will have to be part of the powertrain mix together with electric, and electric will be battery as well as fuel cell. And that hybrid means that there'll be a lot more gasoline and diesel hybrids for a lot longer. And that demand growth certainly is being slowly factored back in. And then, Martin, not to forget, we are between publications, but we certainly do get the news flow from production. And production remains constrained. We know Anglo Platinum is doing well at processing some of that ACP material, but certainly the impact of COVID on their and other operations seem to be keeping supply constrained. And the projects that are being considered right at the moment certainly have 3 or 4 year lead times. So that investment case for platinum, the retail investor, even the institutional investor taking a position, which is why we spoke earlier about demand in North America. But what we've seen in the first 6 months is that there's been over 200,000 ounces of demand in platinum ETFs, mainly out of North America and Europe. Even though there's been some selling in Asia and a little bit in South Africa, the total year to date is still up 130,000 ounces on top of all those imported bars and coins. So I think that investment demand is extremely strong. The market is tight. We've seen a recent spike in lease rates, which has been incredibly unusual over the last 8 or 9 years. So there seems to be slightly less availability of platinum, certainly a lot more going into Chinese heavy duty, as well as substitution. So I think that combination of significant demand growth, constrained supply, and right now perhaps far less availability than people might think.
That was Creamer Media's Mining Weekly, speaking to Trevor Raymond, the head of research at the World Platinum Investment Council.